Hi, welcome to this week edition of Lessons from Top Performance Stocks for week ending 23rd March 2024. My name is Emmanuel Ekpeyon. It's really nice to be with you again. First, it's important to remind you of our disclaimer. Do take time to go through. Okay, so let's go into the very interesting section of this video. So the aim of our video series on lessons from top performing stock, just twofold. First, to see the stocks that did very well in the week, but not to stop there, but more importantly, to learn lessons so we can participate in the coming weeks in stocks that made such big moves. Okay. So on your screen now is popular stock. The name is Gap Incorporated with ticker symbol GPS, a very popular fashion brand. This week, they made a whopping 19%. Just to remind you, for 19% in 5 trading days. Very impressive. What can you see on this chart? We will come back and then we see what lessons can we learn looking at this chart. Okay. The next stock that performed really this week is Micron Technology. And this week, it gained a whopping 18%. So very interesting. Again, what can we see on this chart? We always say on this video series that stocks do not always go up. Some stocks go down. So we like to be balanced. So we show you one stock that performed poorly last week. And that is Science Application International Corporation with ticker symbol SAIC. This company lost 11.3%. What can we learn so we don't lose 11% in 1 week? It's time to then go to the very interesting stuff. What can we learn? I have 3 things here that stood out for me. 3 positive earnings can be very important signal that a stock is going to do well in the stock market. Let's go back to the chart. Gap Incorporated. So where my cursor is, you can see a green EES shows that the last earning report was positive. The one before that was also positive. And if you go back, the other one before the second one was also positive. So my thesis is this: stocks with 3 or more positive earning reports tend to do well. And what is the logic behind that? Very simple, guys. If they are doing well, good profit, good earnings on the streets, most likely they will become noticed by investors. We say that price always reflect the value of a stock. Good earnings is a solid foundation for a stock that will do well. But on the technical side, you can see clearly the area around 22 was a previous resistance area. As stock surged past that with big volume, you can see post-earning, the stock move higher and higher. 3 consecutive or more earning reports is very positive. That's the first lesson that we can learn this week. What's the second lesson? I talked about something new. I call it higher lows. Let's look at what I mean looking at the chart. Again, we go to gaps. Look at where my cursor is. As this stock break forward here, the low is where you have this tick, the lower bar. And from here, the low of the day is either the same or higher than the low of the previous day. This low is clearly higher than the low of this day. This low is way higher than the low of this day. And this low is really high. Even this down day on Friday, the low is higher than the low of the previous day. This is a signal that buyers continue to have confidence in the stock going higher. The last thing that I want to share as learning is above average volume. So let's look at the chart. We use Micron technology. Look at the volume was above average. The yellow line here is the average volume. You can see. So anything above this is, we say the volume traded was above volume. And you can see in the last 5 days, the volume was very, very high. And then when it break through this resistance, gapping up big time, that was a signal to enter. And you can see as well, earnings positive It's a really important thing to pay attention to, above volume averages. We have not emphasized support and resistance, but you can see in the three stocks, this continues to be true. If you know how to identify those areas of consolidation, you can plan your trade accordingly. So I hope you will take these learnings into consideration as you screen for your stocks. Remember, you need to screen for your stocks in the weekend and then have your watch list ready so that in the trading week, you can apply these learnings. And I wish you a very successful trading week. See you